Hello there, Mavericks. This is Rob. It is September 16th. Let's jump into what happened today. In this session, we're going to be talking about the news of the day. We're going to be going over what's going to be happening tomorrow, big Fed meeting tomorrow, and I've got two bullish setups for you, but nothing too exciting.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, today was a very quiet day. It is the day before the FOMC meeting. So look, typically we're going to get quiet action today. We're going to get quiet action tomorrow morning, all the way up to the Fed meeting that comes out at 2 p.m. Eastern time. So look, it was a quiet day. It was a tight candle. We did get some upbeat retail sales coming out at 0.6%, supposed to come out at 0.2 or 0.3. The headline number came out, this is the headline number. The core number came out at 0.7%, which was much better than expected. So retail sales are doing really, really well right now. This is definitely showing signs of economic strength. But what did the markets do today? Nothing. As I said, it's a day before the Fed day. I mean, take a look at this. Everything's pretty much flat. The Russell underperformed a little bit. We take a look at the internals. Basically, half stocks went up, half the stocks went down. We take a look at the chart, and we can see that we've got the S&P up to new swing highs, but then today we had this candle of a gap higher and a fade, but it's not an engulfing candle. So it's really a nothing burger. Some people call this dark cloud cover, possibly, but again, all of these could be called something. It isn't until we get the confirmation candles after that we really get an idea of what they are. So at this point, we're pretty far away from a moving average. We're a little extended. I said for the week, I think we're going to get a little bit of a down week, but nothing substantial. If we take a look at the RSP, the equal weighted S&P 500, you can see that we pulled all the way back to the 20-day moving average. Not as strong, so we're definitely seeing those FANG stocks, those top 11 stocks that make up 40% of the S&P. They're stronger than everything else. But this is still a decent chart showing some strength. Nothing in this heat map really tells you where any strength was. So look, day before Fed meeting, I don't want to spend a lot of time looking at this candle and trying to make some adjustments because it's a nothing burger. Today was a total nothing burger. So with that being said, here we are 2 days in front of, not 2 days, but now 1 day in front of a Fed meeting. I don't feel like sticking my neck out ahead of this meeting. I just don't see the risk reward on it. I don't mind trading before a Fed meeting. I do think that there is a more likelihood of it going down larger than it goes up larger. Hopefully that makes sense. And I talk about asymmetric risk in here. Let's do a 50-50 chance that the market goes up 1% or 50-50 chance that the market goes down 2%. It's not really a great bet. And in fact, it's probably more like 70% chance it goes up 1%, 30% chance it goes down 2%. It's just not a good time to enter. With that being said, let me show you some trades and maybe you can put them on your list for things to look at after the report. I wanted to avoid like high-flying technology stuff, and I came across this. I've been watching this stock for a while. This is Hesai Group. This is a Chinese auto parts maker, and they've had a nice year. They started the year at like 10. Here they are up to 30. And you can see this thing has not wanted to go down other than like one down day. Look at all the other candles. They're either very small red candles or they're green candles to the upside. Even this, again, breaks out, pulls back, and just one red day, and everything else has been nice. I like this one up to 30. 30, I mean, it's right where it is. 31, you could take a look at. So for me, a 29.31 makes a lot of sense. If you want to do something a little bit less delta and more theta, then a 28.30. Vertical call spread makes sense. This one only has monthly options, so you're going to have to go out to October on this one. Next up, I've been watching Lilly. Lilly has made it back on my bullish watch list because now it's above the 50-day moving average, and you can see we pull back. It held that 20-day moving average, had a nice candle today. Looks like the buyers are coming back in this one, and healthcare is one of the better sectors as well. Okay, target 780. I think 780 is a pretty easy target, maybe 775 if you want to cut off those wicks back there. Okay, so 760, 780. And if there's $5 strikes, maybe you do 760 to 775. Nothing super bullish, but just a solid bullish play. As I said earlier, I don't really want to stick my neck out ahead of a Fed meeting. I don't really want to be adding on a whole bunch of new stuff in the morning when I can literally just wait a day or two and probably have a much better entry. Be prepared for some volatility. The markets are at very low volatility right now. There's not a lot of worry. And this is where there could potentially be some big moves. As I said, I think the most likely scenario is we go higher a little bit. But there is that chance that we go down quite a bit. It's not a great bet. You get to make a bet that's right 70% of the time and you make $1. But it's wrong 30% of the time and you lose $2.25. Okay, it's equal. It's equal amount of return. There is no edge there. And that's just where I think we are. There is an expectation, 100% expectation for a 25 basis cut and something like an 8% for a 50 basis cut. But I think we're going to get 25%, but it's all about the statement. It's all about, do they see future cuts down the road? If the answer is yes, the market's going to like that. If the answer is no, the market is not going to like it. But even if it pulls back, let's say the market's disappointed and it pulls back 1 or 2%. Has anything really changed? Has the liquidity picture really changed? Are people going to stop putting money in their 401ks because of this? Are people going to lose their jobs so they can't make their mortgage payments? No. We're going to be in the same place as we were at the beginning of the week. So even if there's a pullback, I see that as a buying opportunity. Let's see what happens when the Fed announces. Let's see the price action. And then I think it's a much better time to enter new trades. Until then, I'll see you later. Goodbye.